What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be checking in on the broad market. After that, we've got our core list of companies, and if you stick with me towards the end of the video, I've got 3 additional trade ideas to share with you, so definitely stay tuned for that. A quick update on our t-shirts. We're getting them made at a local print shop right here in town, supporting local business, which is great. They're set to hit production this upcoming week, and I'll let you guys know as soon as the order link is available. As always, anything else that we're associated with is linked down below in the description, and without further ado, let's jump right into these charts. So kicking things off on the SPY weekly time frame, talking about candle structure and location as we always do. For structure this week, we certainly have a solid green-bodied bar. You'll notice we have minimal upper wick and minimal lower wick here. The most important thing I would say about this week's bar is really the location. So structurally, yes, it's bullish closing up at the highs, but from a location standpoint, we clearly have on a bar-to-bar basis a lower high, but a higher low. Now, what does that mean? We have an inside bar, right? So a 2-week range is in place. If we can crack the highs, we would expect a bit of a breakout. If we crack the lows, we would expect a bit of a breakdown. Now, with the close strong at the highs of the weekly range, we would certainly give the bulls the upper hand here, looking for a little bit of a breakout to potentially come into this area here, which is around 415. Now, why is this such an important thing? Because if the weekly trend is going to reverse, we know that we need to make an equal high, if not a higher high, or pull back for a significant higher low. Now, this is the beginning of that, and we'll talk about that on the daily time frame in just a moment here. But the other thing I want to tie in before we go there is, of course, our volume profile, which just also reaffirms the importance of these weekly levels, right? Because if we look at the high volume node here, it's certainly offering some resistance. But if we can break it, aka break out of the inside bar setup, the 2-week range, look at the low volume node overhead that should fill relatively quickly until we reach that next quote-unquote magnet high volume node, which is the weekly higher high that we're looking for, right around that 415, right? So that makes sense from the volume profile perspective. If we were to reject at this high volume node and just find resistance here, I would imagine that the bearish look for this upcoming week would be rotating back down here, closer to the equal low, not necessarily moving and traveling through this weekly low volume node just yet. So the bullish look is to break this and get to this area here. If bearish, probably remaining in the multi-week balance at this point in time. I would not really expect a big reversal underneath, what is this number here, roughly 365, right? That's the weekly perspective for us. Let's go on down to the daily time frame now and talk about tradable levels into the upcoming week. Bear with me as I load our study set back on the screen. 200 SMA in green, 50 SMA in blue. Zooming in here, let's discuss the expected move, right? So right now, the expected move, if we remain in it for this upcoming week, will technically trigger a new daily uptrend. Now, why is that? Well, if we move towards the top end, we're breaching this set of highs, we're breaching this set of highs, higher highs on the daily time frame does start and confirm a new daily uptrend, noting that we have a low and a higher low right here. That's where this new support trend line is coming from. So the weekly expected move is going to be pretty important this week if we make it to the top end. That will confirm the new uptrend. If we pull back to the bottom edge of the weekly expected move, notice how it's tying in with our support trend line. It would be really critical that we hold that if we are hoping for a big market reversal here back to the upside. The other pattern that you could start to look at as being in play would be this higher low double bottom, right? The neckline would be a breakout up and over roughly 389.75. It's right where we topped out last week. That would be breaking out up and over that high volume node on the weekly time frame that we just discussed. And again, to keep it all congruent, the weekly higher high that we're gunning for would be up here around 415. Now, would I expect the market to make it there in this upcoming week's worth of trade? Probably not, but a break of this resistance trend line, a recapture of the 50 SMA, and just a move towards the top edge of the weekly expected move would certainly kick off, again, a new uptrend and bullish sentiment out there in the marketplace. A major upside target, if this breakout does decide to unfold this week, would be the bottom of the gap here. That's this yellow line at 395.50, and then a move to close this gap, that's from back here, of course, up to 401.39. Okay, so that's probably the top end of what we should expect on a breakout if we get something up and over 389.75. Now, the reason we're talking about bullish implications first is because look at the beautiful consolidation bar on the Friday I was going to say afternoon session, but it was really the full day, right? We just balance. And most importantly, it's above our blue line. It's after a significant move higher here, up and over the breakout point at 381.50, right? So all things considered, Friday's consolidation was pretty healthy in my estimation. It doesn't strike me as a massive sort of rejection bar or reversal bar up at this area of resistance. Instead, we're coming off of the higher low as we've been discussing. That should be the moment where you break the resistance trend line. And we'll look at a parallel in the QQQ in just a moment. So as of right now, liking the setup for higher here, up and over 389.75 to get to the bottom of the gap 50 SMA. And then from there, we talked about closing the gap. Now on breakdowns, I'm not necessarily looking for a short, but any breakdown underneath that 386 blue line, we're looking for the back test of the breakout point here at that 381.50. As long as we're above that in the grand scheme of things, I do think that this is overall just another higher set of lows building out, and we should maintain that stance for the breakout here up and over that level at 389.75. We would start to have more of a concerning look breaking down underneath 381.50 as we would be getting back down into the support trend line, and potentially breaching that sends us to these three equal lows, which is not a good sign, right? We've talked about this a number of times. Three equal lows are generally weak, right? That's not a strong area of support. We would expect that to break if retested, and obviously that would be a breach of the support trend line, undoing all of the bullish sort of reversal work that's been going on thus far. So far, decent look for higher in the marketplace. The main levels to watch, if you want to keep it very simple, breakouts up and over 389.75, breakdowns and a little bit more bearish underneath 381.50. The last thing we'll do before we get into the sectors is take out the Fibonacci's from the lows here up to the highs here. And all I would point out is that we are now back above the 38.2. If you wanted to technically use that high as well, that's not technically wrong. So we'll come in from here up to here. It actually aligns a little bit better, so maybe we should do that. But your 38.2 is that level we just discussed at the 381.50, which lends itself again to the importance of staying above that for the breakout for higher. If we breach back down underneath, the market's really showing more signs of indecision as opposed to confidence for the upside rotation. Let's get into some sectors now. The behind the scenes look, take a peek at what's going on. Whoa, we don't want to do that. We want to drag that lower. There we go. So the XLV is going to be up first. What's going on here? We certainly saw a strong breakout on the Friday session. So here was a bull flag, right? Something that looked like this. Friday broke out, went right to the 200 SMA, a little bit of an upper wick there. So is it going to pull back and consolidate here? It can, and that's A-okay. It's fine. We just need the other sectors to pick up the slack, which we'll get into, namely the XLK and the XLF. The XLF really has to get in gear this upcoming week, and we'll talk about why in just a moment. But the XLV, the chart looks fine. A little bit of pullback here. As long as we remain somewhere above 127, a higher low would be even more preferred. Fantastic. Bullish upward pressure for the S&P 500. Next up, XLK, the most important sector of them all based on sector weighting. What's going on here? Notice the inside bar. Just like we talked about on the weekly, we're looking for a breakout up and over the top or a breakdown underneath the bottom. Because it's two back-to-back green bars, again, I would carry forward a bullish slant, especially coming off of the higher low here and remaining above that 128.40, which we talked about as being critical in the Wednesday update. So for now, the look is bullish up and over those two-bar highs to fill the gap overhead, and that would, of course, probably push the S&Ps up and over its breakout point, confirming a new daily uptrend. So XLK, the level to watch here would be over the two-bar highs, 133, 134.25, we'll say, if it's going to break out over the double bottom neckline. All right. Any pullbacks, of course, still have to hold above 128.40. That's got to produce a higher low if we see some sell-off early on in the upcoming week. Next up, XLY. What's going on here? Heavier weighted sector, not top three, but certainly top five. Can it break the double bottom neckline? That's the major question for many of these chart patterns that are out there right now. If that were to breach, we should target this area here around 157.50, which would be a weekly double bottom, right? If we were to look at this on a weekly time frame, you would see that pattern clearly, and that would be the next neckline to sort of breach and confirm more upside. So far, so good. Liking the consolidation again on Friday, happening on tapering off volume. It was a shortened trading week. The fact that it didn't sell off aggressively strikes me as bullish for now. You want to see it above 143 and for a breakout above the neckline at 148.27. Breaking the 50 SMA as well at the same time should send it higher, breaking two things at once instead of just a simple area of resistance. Next up, XLE. We're going to move a little bit faster through the lightweight sectors. Fine to see it going sideways. This is exactly what we wanted to see. Remember that we were discussing we want to see it base out here. Enough is enough. We certainly didn't want to see it leading the charge to the upside, remembering that energy is more defensive. It's pulled back enough. It's off the highs enough. We want to see this find a footing here. We don't want to see it continue to sell off. Of course, any downward pressure is still downward pressure for the S&P 500. So next up, XLP, defensive as well. The fact that this is going sideways here strikes me as healthy, bullish, fine, no red flags inside of the XLP. The only flag I'm seeing is this bull flag right here. So if some of the other heavier weighted sectors, XLK, XLY, XLV, get in gear, and then this one can follow suit after the fact, fantastic. No issues in the XLP. The chart looks great to me so far. I would really only be concerned about this one if we crack this around 71.50 and then breach into these lows here. That would be the concerning look, obviously, in the XLP, but so far so good. Just healthy consolidation going sideways. Next up, financials. This is where the work needs to be done. Needs to be done. There's no ifs, ands, or buts about it. A couple of important things. Notice that we still have a break, retest, and failure. Friday pulled back off of that level. Now, granted, yes, it is kind of just an inside bar, higher high, higher low, equal high, equal low, same sort of deal in there. Didn't really travel much range. It's happening on declining volume, which again is more of a bullish implication, consolidation at the highs. It held up above the multi-day breakout point, but again, unfortunately, it wasn't enough. There wasn't enough steam in the tank, gas in the tank to get up and over that 32.50. That needs to be recaptured this upcoming week if we're going to see a firmer reversal across the entire market. If we don't have participation in financials, good luck sustaining any sort of major rally out there, right? The healthcare sector can only do so much. The tech sector can, it can pull its weight too. We saw that breakout point there as well, but the XLF really has to participate here. Otherwise, again, I think we're sort of seeing a lackluster move to the upside that could be faded once we get to some unknown level, right? If the XLF isn't participating, it's basically weakness. Think of it as like a break in the armor, right? And if everything else starts to roll over, obviously the XLF being the first one to lead the pack to the downside, no good. So it needs to prove itself. Interesting here is that bank earnings are this upcoming week. We get JP Morgan, Morgan Stanley, Wells Fargo, Citi, BlackRock, State Street. All those guys are reporting later on in the week, Thursday and Friday. So that should be a pretty big tell. If some of those things start gapping up or down, whether or not this will recapture this critical level right here at 32.50. So that's the main watch here in the XLF. And again, needs, not no ifs, ands, or buts about it, needs to get in gear to the upside if this market reversal is going to be more firm. Okay, so I can't stress that enough. Really keeping a close eye on the XLF this upcoming week. Next up, utilities, lightweight sector, defensive, seeing it sideways in here, no red flags, checks out, bullish, or just rather neutral. It's not bearish for the market, that's for sure. Next up, XLI. Lightweight sector, double bottom kind of in play here, continuing to put in these higher lows. Looks good. Remember, it's so lightweight, even if it does see a major breakout here, it's not going to drag the market higher if your XLF doesn't get in gear. That's why we spent so much time on that one, really reiterating the importance of that sector this upcoming week. Same thing with real estate. Sure, is it building out higher consolidation from a building block perspective? Absolutely, but it's such a lightweight sector. If it does break out and go to its next target here, closer to 44.50, it's not going to save the day in the market overall. Communications, what's going on in the comms sector? Certainly recapturing a little bit of that breakout point. So a little bit more relative strength than what we just saw in financials, but it's not out of the woods yet. I'd really love to see it get a higher low above, something that pulls back, firmly respects that as support, and then continues up to this next top of the range. Don't get me wrong. Again, this consolidation up here at the highs on tapering volume strikes me as bullish, but we want to see continuation and not necessarily a rejection here. It's right on the edge, so that's why this one is also going to be important around this 56.40 into the upcoming week. Really want to see communications get a firm higher low or higher high much further away from 56.40, right? So that's what I would watch out for in this one if the market's going to remain bullish. If we roll over here, obviously a bearish indication for the broad market. And then last but not least, materials here, the XLB. What's going on in materials? Not much, right? So really just kind of possibility for a lower high here to here. Not really going to produce too much bearish drag for the market. Remember that this too is a really lightweight sector. Even if it rolls over and makes a new low, as long as the other sectors are rallying to the upside, it's not going to be the biggest deal, not the end of the world. Let's take a quick peek at our ratio grid. This is really exciting here. Some things are starting to turn around, starting to improve. You'll notice the XLK is back up at sort of the rejection line, resistance trend line. There we go. Rejection line is just such a sloppy term, but resistance trend line, right? right? So the pattern does look like it's starting to resolve to the upside. Remember that we sort of had this descending triangle look. We're above the upward sloping 50 SMA now. We're curling higher. Strikes me as a look that's improving. I wouldn't say it's out of the woods yet, but certainly an improving look. So you pair that, we'll put this here for improving, with a definitely bullish XLV. That's good. 2 out of the 4 so far looking good. The XLY, again, probably going to get one of these for now, a little bit more neutral, starting to curl higher, starting to get above that downward sloping 50 SMA. That's a good look. The only thing that's concerning, and as we just talked about it on the actual structural chart itself, is still financials, right? It's hanging out down here at the lows. We need to see this perk up, and then we would have something a little bit better. If this flips to neutral, I would say, okay, if we have one thing that's obviously bullish, and then 3 things that are trying to get bullish, starts to really have me a little bit more confident on the risk on side of things, as opposed to saying, okay, we're still not out of the woods yet. So really, XLF is where we need to see the strength this week. Everything else is starting to do its part. Down at the very bottom of this screen, so the bottom 4 are, of course, the risk-off sectors. Notice how they're starting to deteriorate. The XLP sideways. Don't get me wrong, it's still more bullish than bearish in this particular ratio, so we'll say, not the greatest. We'll put an X there. Energy, rolling over, going sideways. That's fine for turning risk off, right? Utilities gets one of these, a little bit more neutral, coming down into that 50 SMA. It's still above, but really the look has been more sideways here as opposed to a clear trend higher. And the same thing in real estate, really more of a sideways look as opposed to a clear trend higher. So we'll do this. So again, you can start to see that the tides are turning in the ratio grids, and that is of course a slightly more bullish indication for finding a bottom here in the S&P 500. And by the way, if you don't know what this screen is or how to set it up, this video in the top right hand corner will help you out and hopefully make this a little bit more clear. Let's go back on over to the regular charts, if you will, and take a peek at the TNX. This is the 10-year interest rate. And what I want to point out about this is really the economic data that's coming out this upcoming week and what came out on the Friday session, right? We got the jobs report on Friday, and it was fine. It was better than expected, right? We added more jobs than expected, and that means that the jobs market is strong. That means that the Fed is likely going to raise rates again by 75 basis points because essentially the jobs market can withstand that sort of interest rate increase. Now, what that did for the market, obviously, was send the TNX higher, which of course is bearish drag for your XLK. So right now, the main dynamic is that yes, the jobs report came out. It was sort of bullish in the sense that it was a beat, but that sent this higher, bearish for the XLK. What we get this week is Wednesday, we're going to see the CPI numbers, right? So that's inflation. Now, if CPI ticks lower, then maybe the Fed actually won't have to go with 75 basis points. So if CPI comes in lower than expected, expect the market to probably rally, right? Inflation is not as big of a deal as we thought. Maybe we don't have to continuously hike rates as aggressive as we have been, and that would be fine. So is there reason to believe that they could go with 75 because the jobs market is strong? Yes, but if this comes in better than expected, maybe it's back down to 50 basis points, right? Who knows? We can't say for sure. I do think that there was something like a 90% certainty rating based on the tracker or whatever it is from the Fed that was saying 0.75, but we'll see, right? CPI can cause them to flip in the blink of an eye. So that's the dynamic from really a more fundamental perspective this upcoming week. If you want to keep it really simple, any further rallies here in the TNX will be downward pressure for the XLK, which is really downward pressure for the SPY. If this wants to roll over here and neutralize sideways on a good CPI report, right? So inflation's ticking lower, maybe interest rates won't have to be hiked as aggressively. It's a good thing for the XLK. I do imagine the market would like that. So we've spent enough time talking about sort of more of a fundamental outlook. Let's continue behind the scenes and take a look at the VIX, right? So VIX coming in aggressively, but please do not be fooled by this chart. We've talked about this. Let's actually draw it in as the actual box. This is the box of wickedness. We're at the low end of the box of wickedness, but we're not out of it all the way yet into that 2050 mark. And even if we were to come into the 2050, let me remind you that the 2050 used to be a ceiling, right? So now that's going to potentially act as a floor and volatility will remain high. But again, please don't be deceived by this chart. What I want to point out is the next step behind the scenes, which is the VVIX, the volatility of the volatility index. And this has continuously been down here underneath 103 at these sort of historic levels. Now, what does that mean? No one's hedging, right? No one's buying VIX calls. No one's buying SPY puts. If the market were to see a downturn, this is signaling massive risk because essentially what happens is because no one's hedged properly, everyone rushes in to buy SPY puts, VIX calls, sell ES futures short. all of that happens at the same time, you get a move that looks like this instead of a nice, easy downtrend to the downside like this, right? So this would imply if a sell does happen. It's not saying a sell will happen, but if the sell does happen and we really break down from here, expect it to be hot and heavy because nobody is hedged properly, okay? So that's the behind the scenes look in the VVIX. Let's take a quick peek at our internals. If you don't know about this screen, top right-hand corner, I've got another little tutorial for you on what it all means. A major concern here as well is that we're still not seeing broad-based market participation in the rally so far. Notice that all of the internals, bearish on Tuesday, it was a shortened holiday week, so starting on Tuesday, bearish Wednesday, really the only major inflow day was the Thursday session where we made that big rally, sort of, I wouldn't say big rally, but sustained rally would probably be a better word for it, from the open basically all the way into the close, and then it was neutral on the digestion day from Friday, bearish in terms of the advanced decliner on Friday, the tick distributions were weak early on, again, decent on that one rally day, but on the digestion day, back and forth. You can see no major sort of skew one way or another. So again, this would sort of fall more into the slightly bearish to at least neutral camp to me. I think it sort of evens out our analysis from being fairly bullish on the SPY daily time frame, right? If we look at the behind the scenes context here, we're again still just not quite getting all of that broad-based market participation that would give you more confidence in a rally or breakout here. And again, I think we saw that clearly in the sector distribution and the XLF mainly being the one that's the laggard still, okay? So this is sort of confirming that slightly cautious, layer it like this, right? It's a cautiously bullish outlook into this upcoming week is what I would say, okay? So that's what we've got in the internals. Last thing for the S&P 500 is going to be our market profile. Again, if you don't know what this is, I've got a video tutorial for you in the top right-hand corner. Main takeaways here. Value did move higher on the Friday session. That's actually bullish and contrary to what we just said about the broad-based participation not being there. The point of control was fairly equal, right? So that is an area that's going to act as a magnet. If we can't get out of this two-day range, expect the market to sort of gravitate right towards that 3,900. Now, on a breakdown of the two lows here, so if we fail this consolidation higher, where should we target? I would start thinking about naked virgin point of controls to the downside. So that would be a move into here. That's 3830, I believe. And then after that, if things were to get real nasty, probably coming closer to 3760, okay? So this would really be my first target, 3830 in the ES futures. If the market were to break down from the two-day balance, fail a breakout up and over the highs, so that might look like just something like this quickly. If we do this and fail back down into range and then take out the two-day lows, your target's the point of control from here, right? That's how you would trade that setup. If the market fails a breakout into the earlier part of this upcoming week, tag up to the virgin point of control. Okay, so that's what I've got for you there inside of the ES futures on the market profile. Let's quickly go on back to our, whoa, what's going on? A little bit of a frozen screen. Apologies for that. But we're back over on Thinkorswim. All good. Let's go to our charts. I do want to point out, last but not least, actually, so sorry for droning on here about the S&P 500, but it's really critical. I think we are at a major potential bottom. I firmly do believe that, right? If you look at what's going on here in the SPX A200R, that's the percentage of stocks that are above the 200 SMA. Look at what happened. So the June print finally came in. We only really look at this on a monthly time frame. The June print did come in, and it closed inside of the yellow box. Now, the yellow box aligns historically with major market reversals, right? So this is kind of the most history we have in the SPX A200R. Look at the big low here. That's your low here. This low right here correlates with that right there, right? This is this basing right here. This is kind of this. And this, of course, is the big sickness low. You can see as the cursors hover, they align, right? So you can see that going on. If I zoom in here, notice how that's that low. And we're currently coming in for, again, a solid print in the yellow box. Is it time for a bit of a reversal? This chart would certainly say, yeah, we're kind of at those levels where we can expect conditions to start to improve here instead of to continue to deteriorate, okay? So that's what I would say about this. Again, sort of aligns itself nicely with the slightly, or I should say cautiously bullish outlook that we've had throughout today's analysis, okay? So that's what I've got for you for the S&P 500. That's actually going to do it this time. We're going to take a peek now at the QQQ, the NASDAQ 100, then we'll move along into IWM Russell 2000 and the small caps. What's going on here? Very similar look. I did want to, of course, point out the relative strength in the fact that we've broken the resistance trend line. We talked about in the SPY coming off of the higher low and getting into the trend line is usually a more bullish implication for it to actually break. And of course, that did actually happen here inside of the QQQ. So let's go ahead and remove that. No longer really necessary. And instead, the pattern, of course, is starting to become that double bottom, higher low double bottom. And we also have the gap overhead, right? So that's something to start contending with as well. The lower edge of the weekly expected move is set to give us another higher low here. So that keeps us safe in terms of the daily daily uptrend starting to remain in place. Now, granted, this isn't like an end-all be-all area of support, but I would just say, if the market's going to quote-unquote get it right this week, then that would be fine, right? Coming into that area and reversing off of it would produce a higher low. Any then higher low reattempts for an equal high here sets this up as then an ascending triangle, not so much a double bottom, for the breakout higher to again get us here, 302.50, but more importantly, these equal highs. That would be the rough equivalent of the 415 SPY that we saw, or the weekly set of higher highs, right? So that would be the bullish outlook here in the QQQ. Breakouts up and over 295, fill the gap up towards 299, 300 even, and after that, kind of game on up until that let's go with what is that? Let's actually find the actual number here. Apologies for not having this prepped. 310.85 is what I would say should be the primary target of that upside move from right around in there. So that's the upside. Of course, bullish, again, based on the consolidation from the, nice higher low and inside bar on the Friday session for all intents and purposes, also above the blue line. If it were to break down, still cautiously bullish as we come into the low edge of the expected move. Noting, again, we would still be above the support trend line. The line in the sand is, of course, from a technical levels perspective at 284.50. So that's your QQQ. Next up, we've got the IWM Russell 2000 and the small caps. This one actually recovered quite nicely, was some relative weakness as this was unfolding in here. Love the consolidation bar from on Friday's session. Again, if this is going to turn into a beautiful higher low double bottom, neckline breakout is up and over 177.60. Your target is the trend line and bottom of the gap here. That's 181.50. And then for the gap to fill up towards the top edge of the weekly expected move, the gap close number is technically 183.57. That's your bullish look in the IWM. A breakdown of the blue line. Yeah, it's not the most optimal sort of breakdown that could happen, but if it does, that's fine. As long as we're above 169, we're above the support trend line, that would be all right for this upcoming week's worth of trade here. And I'm also not sure. This weekly expected move strikes me as being way off. I apologize for not having that correct. Maybe I'll throw up a quick edit on the screen with some numbers here to give you the actual top end and low edge. This should technically be in the midpoint of that expected move range. So that's going to do it for the broad market. Let's get into these core list of companies. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. And with that, let's get right into Apple. This chart continues to look absolutely fantastic. This thing is golden, all right? So the reason I say that, why, right? So here to here, higher low, obviously, right? But more importantly, look at what happened into the close of the week. Certainly a higher high that was set from here to here, so that confirms a new daily uptrend. But more importantly, a recapture of the blue line, the 50 SMA. That is a critical recapture here for Apple. So going forward, what do we want to see unfold? It's certainly been up aggressively now 1, 2, 3, 4, 5 days. I'm not sure I would initiate a new swing long up at this area of resistance, but instead I would say if we get higher low pullbacks that remain above this area right here, 143, game on, right? That should be a buyable pullback here inside of Apple, noting the extreme strength we've seen off of these lows. So again, it doesn't mean just blindly buy here, but if we see the setup unfold, that is the obvious sort of buy, right? So if the setup is there at this area of support, could be a nice hammer candle, could be an intraday double bottom on like a 5 or 15 minute chart. That to me would be bullish off of 143 on the pullback. Any just consolidation in here, if you're not much of a pullback buyer, that's fine. That builds out a bull flag. And from there, your next breakout is up and over 148.25 to get up into 152.20. Now we know that that area was quite significant. So that to me might offer more of a significant amount of resistance as opposed to this level that we had mapped out at 148.25, right? So that's the outlook in Apple. On the bull side, any failures to hold up above this, probably be patient and wait for the support trend line. Shorts would really only come, and again, you can have intraday scalp shorts, that's absolutely fine, but I'm saying from the grand scheme of structural perspective, shorts would be on the breakdown of the support trend line, right? A big failure of that would, of course, kick off another short leg to the downside, I would imagine. Next up, we've got Netflix. What's going on from Netflix, there we go, perspective. Certainly consolidating, going sideways above the 183. You guys know my deal at least. I'm neutral inside of Netflix in between this range based on the big failed breakout from here. The fact that we broke down underneath the support trend line on that move lower. I just don't trust it in this area. So for me, the next breakout is up and over 192.50 to start to target that 202.25. If it wants to chop around, slop around in here, that's fine. Again, intraday scalps on a 5 or a 2 or a 15 minute chart, whatever, that's a-okay. I'm not saying don't do that. that type of thing, but we don't really have direction until we can clear these highs or break back down underneath these lows around the 183. So Netflix kind of just playing this one by ear, waiting for this range to resolve in this area. Next up, Tesla, absolutely fantastic price action into the end of the week. We talked about this setup on the Tuesday session, the big bullish outside bar. You can go back and watch the video on any of the pre-market live streams, really, or even the Wednesday post-market recap, right? This breakout here, absolutely fantastic inside of Tesla. So I love that. We did form a new higher high. This is coming off of a new higher low. The chart does appear to be trying to form a new daily uptrend, but I would also remind you, from the grand scheme of things, we're just moving back up towards the top edge of this range on the daily time frame. So yes, it is bullish in the short term here, but we really haven't gone anywhere impressive over the past couple of months. Now, if we can break the resistance trend line, break the top edge of the balance area that I just outlined, yeah, that would firmly kick off a better bottom here on like a Tesla weekly. You could start to look at this as a range of accumulation. Maybe the next move gets us closer to here, 950, 1,000 again. That could certainly be a possibility, but one step at a time here. Just because we've been bullish the past 4 days, I don't want us to get ahead of ourselves until we can break that resistance trend line and the top of the weekly, or yeah, I would say weekly balance at this point in time. That's 780.75, okay? At this point in time, higher low pullbacks need to be above 700, then reattempts to this resistance trend line do strike me as breakable. If we break back down underneath 700, that to me would just be range compression, noting that we're getting something like this back down towards here. You know, maybe it's just more ping pong until we can resolve the range more firmly. So Tesla, yes, bullish in the short term. Yes, increase in volume. Yes, higher low pullbacks do look viable for something that does this. But if we just remain in the range, if we can never crack that 780 or the resistance trend line, maybe it's time for a little bit of a more significant rollover here inside of Tesla. So really watching those numbers, 700 and 780 on the upside. Ideally, the pullback, you know, it'd be beautiful if it could hold up above 736. Reason being, on like a smaller time frame here, here's a 30-minute chart, would be, you know, boom, consolidation, right? We also saw decent bull flag consolidation on the Friday session. So to me, bulls are in control here in the short term. And again, you can see that the deepest of pullbacks really only wants to go to 700. Anything that fails that is giving back too much of that move here. And it would be underneath, right? 100% retracement and some. So that's what I've got for you in Tesla. I love how the chart is continuing to unfold here. That's why we spent some time on it. AMD is up next. If we could get this to load. Wow, a little bit of lag going on Thinkorswim this weekend. Anyways, what do we see here? So here's the bear flag, the breakdown. We're just coming in for a retest, break and retest, right, of that 80.44. So to me, I would not want to be looking for longs here. Instead, I would look for weakness for a rollover that would do something like this. Unless the chips can really, really rally and get something significant here, I would probably look at the SMH, the Van Eck ETF, right, for some sort of indication on that. I wouldn't really be looking at AMD longs here just yet. I just don't think that the structure really lends itself to it. I think we're looking at a short against resistance, which was prior support, instead of a breakout trade here to move back to there. I think the only sort of long trade, or the better long trade rather, would be to see this build out as an inverted head and shoulders. Break of the neckline would strike me as the more confident long to start to come up to this gap, maybe get to that 100 like psychological level again. I don't really think the long is here just yet. So hopefully that makes sense. Next up, Meta. What's going on? Top of the range, just like Tesla, a little bit, you know, I wouldn't say just like, but similarly in a range, hanging out at the top end here. Consolidation is happening on descending volume, right? So this is bullish to me, looking for a breakout to fill the gap and get continuation through this thin structure back into here, the breakdown level at 188.50. So really watching Facebook Meta for some upside here out of this bull flag. Again, how's it look on the 30-minute time frame? Nice higher lows are continuously be putting in. If we can break this set of highs, 172.56, look for the gap to fill up to 175, 2.5-ish point range there, and then it's off to the races through that thin structure that we just saw on the daily time frame here. So I like Meta for upside. If it rolls over, breakdowns underneath 166.50 are kind of where the shorts can come back into play into, you know, the lower edge of this daily range right here. That would be more of, okay, we reject up here, the firm breakdown confirms it underneath 166.50. That's where you look for downside. But if we just hang out up here, building out bullish, healthy consolidation at the highs, in my estimation, for a move higher. Next up, NVIDIA, what's going on here? Very similar to AMD. It is above its 154, 155-ish level. That was kind of the flush. So instead of a break, retest, and then roll over, you can see we're already inside of that range. Two back-to-back equal days, Thursday and Friday. Very simple. You always play a two-bar range like this the same, long up and over the highs, short underneath the lows. If it does something like this, fake break, and then closes back down within the range, obviously that's a failed breakout. Sellers appear to be strong or buyers just simply weak. Then you look for the short underneath this for that next sort of move. So hopefully if you play the breakout and it stuffs, you've got a stop loss in place, right? And then the next trade is short under the lows, okay? So that's how I would look at this one on NVIDIA. Very simple 2-bar play here in place. Longs probably want to target somewhere up here, 169.50. If we can get a breakout on firm volume, if it flushes the lows, I would just look for incremental lows as the market overall does seem to be coming into a little bit of a bottom here. So if the market's moving higher, obviously don't look for NVIDIA to just have like a nasty, I don't know, 10-point down day, something that would be completely out of the blue, right? Unless there's news. Next up, Microsoft. What's going on with Softy? Second heaviest weighted component of the SPY and the QQQ. I think we were guessing between 2 and 3 slot on last week's video, nonetheless confirmed as second slot. You can certainly see looks very similar to Apple with the higher low. It just needs the next higher high. Breakout of the 3-day balance strikes me as bullish, up and over 267.25. Target is here, 273.50. Then it really opens up for the breakdown point. That would be going back to the quote-unquote scene of the crime around 285.75. All that means, by the way, don't read into these terms too much for more than what they're worth. If we go to something, I don't know, let's go with a longer time frame here. Here's a 90-day hourly chart, right? Scene of the crime just means that's where the sell started, right? That's all it means. Don't read into it too much. It's where the sell started. That's where the target would technically be if we were to breach this set of highs in here, okay? So that's hopefully a little bit of insight for you on a Sunday afternoon. Amazon, last but not least, the mini beast. What's going on here? Certainly looking good, just like Microsoft with the higher sort of low. It's, you know, it is technically equal, so I take it back. Not quite as good as Microsoft. There's still the possibility that this could be coming back into play at 102.61 if we reject off of this level, if the market kind of falls apart from this reversal here. If we get it completely wrong and if it's not bullish at all this week, Amazon is probably where I would look for weakness, just because this is such an obvious breakdown point at 102.61. So I'm carrying that forward in the back of my mind as if the market does the opposite of what we expect this week, maybe that's where I'm looking for things. But as of right now, I'm not positioning short here for the expectation that in the future that's going to break down. That's not how it works, right? As long as we're above 112, fine. Bullish consolidation in this technical area in the short term. If we breach the 117 level, obvious look is for 121, right? So just play it level by level. Don't position early just based on a gut feeling. The level needs to be in play for you to make the move, all right? So hopefully that made sense here inside of Amazon. Main watch is 117 breakout to get to 121. If we remain above 112, bullish consolidation breakdowns there put into play a double top. And then yes, maybe over time, 102.61 is coming back into play as a flush point. Quick reminder to hit the thumbs up button, the subscribe button, the bell button, all of those buttons YouTube tells us to tell you about. And let's get right into MU for our first trade idea. Hopefully you know the script by now. You know exactly what I'm looking at. All of these equal highs right to the level at 60.44 strikes me as a breakable level. So if we breach it, look left. Clear structure, right? Very, very thin on the downside. The retest should be here to roughly 66. So a decent, 5.5 point range to the upside to trade for here on a breakout of 60.44. Friday's candle is not the most promising. It is an inverted hammer after we've made a move from lows all the way up to this high. So could we see a higher low pullback first? Absolutely. I would just continue to monitor this level 60.44 in MU for potential breakouts in the future. That's a level that I'm going to have on my radar for the upcoming week. Next up, KSS for Coles. What's going on here? Again, you should know the deal by now if you've watched the channel for any period of time. You know I love trading for these gaps. If we can take out, what is that, 29.80? Look left. No structure until we come up and move into here at 34.30. The reason that this is in play is because we have just balance in place. It even is a bit of a fake breakdown, right? If I just adjust this so it's a little easier on the eyes, that's better here. Notice how we technically gap down on the Thursday session after breaking down from the 3-day range. Buyers recapture. We're back firmly in the range. That strikes me as a failed breakdown. So buyers technically seem to have at least the upper hand here. If we can breach 29.80, 30, if you like nice round numbers, again, target is 34.33. Next up is going to be Z for Zillow. Last but not least, whoa, oops, we want the zoom tool, not the palm tool. There we go. Why is this on our radar? Because it's got a new budding uptrend with the higher low. We do not have the higher high yet. And here's a couple of things that I would watch out for inside of Zillow. So the breakout level is really here at, 35.75. If we can get a daily bar to close above, it's kind of game on into these levels here, retracing this thin structure. So that's why I like it for upside, because we have thin structure not really providing too much resistance if the breakout does come. Now, we do have some concerning looks, right? Inverted hammer on the Wednesday and Friday session with two sort of failed moves up and over that 35.75. That's why we said we need a daily close above, right? So if a breakdown happens underneath these 3-bar lows, so this is a multi-part trade. There's a couple of things you could watch out for here. Number one would be we just remain here. We never take out the 3-bar lows, and then it's off to the races. That's scenario number one. That's the most bullish. Scenario number two would be we actually break down underneath the lows, respect the support trend line, put in another higher low, reattempt this resistance point. That would turn this into an ascending triangle pressure cooker top, right? And then we break out from there. And then, that would also be cleaning up structurally those three equal lows, right? So it doesn't have to get all the way to the support trend line, but it would clean up these lows, quick snap underneath, collect the stops, right? Run the liquidity, then back higher. That's scenario number 2. Scenario number 3 is the trade's off the table. We just do something like this: break down, and then it's just a double top. Break of the neckline maybe gets us back down for the equal low here. I'm not necessarily sure that I would trade it short. I'm really looking at this as more of a long setup, but I did want to walk through those two particular scenarios for how the trade could unfold, all right? So that's what I've got for you on today's session. If you enjoyed the video or learned anything new today, let me know in the comments section or by giving the video a thumbs up. With that being said, we hope to see you on the live at 8:30. Every single day we're live at 8:30 for the pre-market prep. Hope to see you there, and I wish you all a green trading week.